Hello, my name is
Hello.
Crystal Petry, and you are watching another episode of the Crystal Petry Podcast, Season 3. On today's episode, we will break down credit, money, and wealth building through a real, unapologetic lens. From the legacy of redlining to the rise of Black entrepreneurship, we're diving deep into the tools, strategies, and stories that help our community build credit, reclaim economic power, and secure generational wealth. Let's get into these conversations that our families, our future, and our freedoms deserve. So, welcome to the podcast, Dr. Joe Cannon. How are you?
I am great. Thank you for having me on the call on this morning.
Absolutely. Thank you so much for agreeing to come on and teach us about something. I feel like everyone needs to know about wherever you are in your life, business or professional. You need to know about money. You need to know about credit. You need to know about wealth building. So, all the things. So, Dr. Joe, where in the world are you?
I am in California in the city of Lathrop.
Okay, now where is that? I don't think I've ever heard of that.
Lathrop is by Tracy, Stockton area in California. I'm originally from Oakland, so it's about 35 minutes from Oakland.
Okay. Now, definitely I have heard of Oakland and Stockton, so excellent. Okay, so my first question for you, Dr. Joe, how has the history of redlining and discriminatory lending shaped the credit challenges of Black families?
That is a great question. I believe that with the redlining and things, it was designed where we can only get so much credit, right? And by having that credit or being approved for so much money because of our credit, then we could only get so much house. So it's kind of like, we don't want you over here, so we're going to have a rule centered around you're going to be approved for this amount based on credit. Of course, they have to do with your debt and income as well, but that credit have to be about 620 or greater. And depending on that, depends on how much you get returned as far as the lending you're able to do, which can determine where you're going to buy a house at. You might have to, and so we have that where you have all the urban areas, the hood, so say, right, where the houses may be cheaper that we can afford type thing, so putting us all in a box.
Right. And they literally used a red pen, which is why it's called redlining,
Exactly.
to circle or mark the area where they wanted Black families and Black people to live, or to your point. What are some of the first steps someone should take to begin their credit repair journey?
Well, the first step is getting their credit ran.
Okay.
see what's on the credit, and then see if there's duplicates on that credit report. Sometimes people make mistakes, right? And you have duplicates of the same things that's on your credit report. So getting some of those things taken off of the credit, and then looking at the amount of credit you're using on that credit card. If it's maxed out compared to having it below half or however, right? Because if it's maxed out, that can affect the credit a lot, but you knock it down, it's still all right to have some debt on there, but don't want to have it maxed out.
Right. And how would someone go about getting their credit report?
That's a great question. Look at, you could go to a lender, can run your credit online, running your credit online and see what that credit score would be, but again, going to a lender would be the best way if you're looking to buy a house or however, because that lender credit report would be more suffice than you just running a credit report through Credit Karma or something like that.
What are some credit myths that you feel like need to be debunked?
Well, some people, I hear a lot of times that, of course, running your credit can hurt your credit, but people act like they run it once this month and then 3 months later it's going to hurt or however. You have a ding on it, but it's about having so many inquiries on. If you're having too many inquiries in too short of a time, then yeah. But to me, I run my credit when I need to, right? Some people are like, oh, don't run my credit. Just go mess my credit up by 1 point.
Right. So what you're saying is it's okay to run the credit, I guess, as long as you're not doing it every single day. what, maybe once a year, once every 6 months?
I would say even 3-4 times a year. I probably run mine. Applying for a credit card, you're gonna run it, but you may have that soft credit pull instead of a hard credit pull.
Okay. And can you tell us the difference between a soft credit versus a hard credit pull?
Well, the soft credit is kind of like looking on the surface of things to see if you're paying your bills on time and if you're paying your bills on time and things like that. But the hard pull is going to go more deeper into years of your credit or it's kind of like, how could I put it? How could I put that? Surface, just a soft pull. It ain't going to affect your credit too much. You probably won't even knock off a ding, but when you get that hard credit pull, now you're going to get that probably 5 point or something, or however, knocked down off that credit report. So like someone that's looking for insurance, because I do life insurance, right? Mm-hmm. They do a soft pull on their credit just to see if they're able to make their bills or if they're paying their bills on time, right? But then you have the hard credit pull. Now we want to see if you're making the bills on time, but then also how many inquiries you have, how much debt you have, and all that kind of stuff,
Let's talk about financial literacy, Dr. Joe. What does that mean to you, financial literacy?
Financial literacy is education. It is on a financial spectrum of how I can grow my money, where I need to place my money, how does money work? How can I become financially free? Because if you're financially ignorant to a thing, you're going to be robbing Peter to pay Paul and keep going in circles and circles and never getting to that freedom. I think it was who was that? Warren Buffett that said that if you don't find a way to make money while you sleep, you be working until the day you die. So if you don't have the knowledge of it, then you just go be in this rat race. But when you get the knowledge of financial literacy, now you more aware of where you need to place your money and how to grow your money and things like that.
When do you think families should start talking about money? Because I know a lot of families don't talk about money in the household. They don't talk about paying bills. They don't talk about insurance. They don't talk about like credit scores or things like that. When should families, moms, dads, start talking about money openly in the house?
As soon as possible. Mm-hmm. I have a wife, 3 kids. Me and my wife did foster care. And when the kids was younger, we took our last name, which is Cannon, of course, right? And we made some Cannon bucks that we called it. And we put a picture of me and my wife on a little fake money. And because when you had the kids and foster kids and they want something, it was like instead of giving them this, you have to earn a Cannon buck. And how do you earn a Cannon buck, right? You have to do your chores or do something around the house or going to church. I may ask a question, give them a Cannon buck.
Now I love that.
You can use that Cannon buck to buy some things around the house. If you want some chips, all right, it's going to be 1 Cannon buck. You don't have one. You don't have no money. You don't have so starting young. Yeah. Teaching about savings.
Oh, I love that. The Cannon bucks. That's a great idea for anybody that's listening. Create your own money and use that. And it really teaches budgeting.
Definitely.
It teaches cost and value. So that's a great idea you and your wife did. Can you explain to us what is emergency or the importance of emergency funds, but also what is emergency funding?
Yeah, that's a very important thing because someone gets sick. It is said, I believe, like 40% of people or 40 or 50% of people don't have access to a $400 in an emergency. And so it's very important to have something aside because we never know. Like, it's not a matter of if we're going to get sick, it's a matter of when, right? And it has been said that the number one cause of poverty is chronic and critical illness. Mm-hmm. So you got to think about it. If you can't go to work, will your money stop coming in or will it keep on coming? So you need to have reserves. Think about how many months can you survive if you was to stop working today, right? All the money that you live on. Now, some people, and it is good to have like 6 months worth of your 6 months worth of expenses and things saved up just in case. So you can have at least 6 months to get some things together. So it's very important to have your emergency funds. And then what is that? That is being able to survive for that time. Because again, if you're out 6 months and you still got these bills coming and you can't pay them, now you're going to lose the car. Now you're going to lose your homes and things like that. So it's very important. Even the Bible talks about the wisdom of the ants, right? Mm-hmm. Little ants go around and they collect crumbs and they put it in their bread house. They put it in the storehouse. Why? Because one day we won't be out there getting these crumbs. So we got to store it up for the time when we can't go out. And that's what we ought to be on as well.
I remember one of my guests told me, Dr. Joe, that of course emergencies are going to come. Just like you said, people are going to get sick. Your car is going to break down. You're going to need new tires. The roof is going to leak, whatever that looks like. But I remember him saying, if you have the money, it's not an emergency.
If you had the money,
it's not an emergency.
Even in that too. I mean, having the money, yeah. But after you have that money and you still haven't gotten better, but now you done depleted it, then what, right? Mm-hmm. But definitely it's not an emergency if you had the money.
Yeah, absolutely. So what steps, give me 1 or 2 steps that people can start doing to build their emergency savings, to build their checking account, their savings account, especially with student loans, which so many people are plagued with.
Mm-hmm. Well, I'm gonna tell you, for myself, I've been very disciplined. I started off as a barber, and I would cut hair, but when I get home, I will put all my 20s up and just stuff it in the bear or whatever, just saving my 20s, right? And I would leave out the house with 5s, 1s, and 10s. But the bigger bills, 20s and 50s, I would save and don't never look at them. Mm-hmm. And from that, I would say a year later, I done saved up $15,000 and was able to buy my first barbershop.
Wow! Congratulations!
Yeah, thank you. And then also when you have them Alhambra jars, right? Get the change when you get home. Put your change in those. That will add up. So these are some of the tools that I have used when having these kids. Christmas coming around. So every Friday, I would save $100 in my safe. Put it in the envelope every Friday. So that would be my Christmas savings. So by the time Christmas comes, $3,000-$4,000 or so, right? And now you don't have to worry because you didn't save this. So it's very important to save a little bit, set it aside, whatever you're making. My rule of thumb is 10% goes to the church and 40% goes to my savings. And then I live off the other 50%.
Right. That's an excellent math equation. But I love the fact that you're talking about like taking your change and saving that. If you have not started saving, or you don't have like a savings account or a checking account, start small, because small ends up growing and growing and growing. So putting your excess change, your dollars, into like one of those big water buckets or whatever is a great way to start saving. And then you can move up to the $20 and $50. Wow. Yeah. You saving a lot at that point. And you can really just put that into your savings account, put that into your checking account, whatever, and put that into your emergency savings account. So you can start small and work your way up to something much larger. So those are great options. Can you tell us the difference between good credit and bad debt? Good debt versus bad debt. That's my question. What is the difference?
Well, I would say good debt is having that mortgage. You having a home, but you have this debt. I mean, you're paying on it, but that asset that you have is working for you, right? It's building more equity. Right. Good debt, I would say, is me owning that barbershop, right? Maybe I use that $15,000, but then I go and open up another shop. Now I get a loan, and then I open up that shop, right? that's some good debt, because now I have a business and I have revenue, money coming in, income coming in, and pretty soon that which I borrowed is gone, and now I had an ownership. Some bad debt is just using these credit cards for anything, using credit cards and maxing them out and purchasing things that's not going to give you any value. And doing that too much starts to add up, and then you find yourself can't even pay the minimum on the credit card, and now that's creating your credit score to go down because you ain't even making those payments. But having that type of debt with your home, you may have equity in it. You can refi, pull something out. Bad debt with your business, you're right, but it's good debt because you have income coming in that's going to be able to take that debt down. So those are the difference between good and bad debt.
What is interest rates? We hear this so much on TV. We see it on social media. Yeah. What are interest rates?
Interest rates is the well, I was gonna say interest rates. No,
I knew that's what you was gonna say.
When it's on the other side, all right, because interest rates is, say you have a $5,000 credit debt, but then your interest rate 17% or however, right? Now you got to pay all that interest on your $5,000 even before anything hits the principal. So now you're out $600 something a month just off of the interest on that, right? But just off the interest on it. And so if you have the interest working for you, of course it's good, but when it's working against you, it's kind of like buying having credit debt for $5,000, but by the time you pay off that debt, you done spent $12,000 because you only was probably paying the minimum, and that interest that was working against you. So I have a chart that I kind of be sharing sometime, and it's dealing with simple and compound interest. And compound interest is that interest that's compounding with your credit card debt, your mortgage payments and things like that. So that's why even today, a lot of people has stopped buying because the interest rates got so high.
Right.
And the higher the value of a home, your payments going to be higher because of the interest. But when they lower that interest rate, now people are more prone to buy because the interest rate is lower.
Right.
But your money in an account that's giving you some great interest, now is heaven. So now you have interest working for you instead of against you.
So it really just depends on how you look at it and how you're interacting when it comes to interest rates.
Yep. Because if it's debt and that interest rate is high, no, we want the lower interest rate.
Exactly.
Right? But if I need to grow my money, I want the higher interest.
Exactly. What role do you think financial education plays in school and in communities? And I don't know too many schools, and I could be wrong on this, but I don't know too many schools that are educating about financial literacy.
Yeah, that's a good point. Me either. That's why it's a miseducation, financial literacy, and that's why 95% of America end up poor, because we don't educate on the finances early enough. It's a huge. If we put that in the school, we'd be a lot better, right? Because we start to understand how money works a lot sooner. But because of that, it's all trial and error. And there was something that was played on YouTube, and it showed these fleas in a jar, right? And it said that if you put fleas in a jar and you put a lid on it and leave these fleas in there for 3 days and then remove the lid off, those fleas won't jump no higher than the level that was set by that lid, right? No matter what. Then they offsprings will repeat the same process. So I always say that the financial lid has been taken off, but a lot of us still be in the jar because the only education we got it from our parents and grandparents and things like that, where they never really got taught financial literacy. So it's a missing curriculum in the school. Now I know some schools has been starting to kind of bring it in, but it ain't it ain't enough.
How can community credit unions help address the wealth gap?
The community credit union?
Yes, credit unions.
To create the wealth gap. wealth gap between just
How can they help address or like help fix the wealth gap? Credit
Mhm.
unions. I
Well,
know, one of the ways, most of the time, and of course, this is not 100%, Dr. Joe, but most of the times, credit unions will give you a lower interest rate on loans or credit cards, things like that.
yeah, I agree on that. Even on that's why we're buying a car. Some people are like, oh, just go to my credit union and,
Yeah.
and use that. So, I mean, that helps, but that, of course, that's not enough. We need higher interest rates on the money that's sitting in the credit unions, right? Where the money's sitting there. Because, see, me being in the insurance industry as well, understand that banks and credit unions and things like that, they invest money in life insurance assets, right? And these life insurance assets, cash accumulation products, they get 20% rate of returns, 30%, and all that kind of stuff, right? But then again, you put your money there, they're invested in other things, getting a larger return, but then they turn around and give us less than 1% growth on our money, right? And then even if you do get like a 3%, 4% rate of return on your money, something else is happening that you're up against, which is called inflation. And so with inflation going up, the cost of living go up by 3 to 4% every year.
Correct.
And then it went up 8% sometime, right? But about 3 to 4% every year. So if you're getting a 3 to 4% return on your money, are you really making money?
Most likely not. But of course, let me give this disclaimer.
Mm-hmm.
Neither myself or Dr. Joe or accountants or
Right.
CPAs. So please seek out financial advice from someone that is certified to give this information. We are just talking about this information and educating those that are listening, those that are watching on some strategies and some ways to help with financial literacy and financial education. We are not, your CPAs. We're not your accountants. So please find your financial information, your money information from someone that you know and trust.
Mm-hmm.
So now that we got that disclaimer out the way, Dr. Joe, how can people start to rebuild their credit? Maybe after a medical debt or eviction or unemployment, something dramatic or maybe not dramatic. How can people start to rebuild their credit?
They have these prepaid credit cards type thing that has been able to use where you will load it and use it for practice in a way that kind of helps, but it has to be the right one. I can't recall which one it is, but it is a way on doing that. And then also, if you have a good relationship with somebody that has good credit or great credit, get added on as a authorized user, right, of that card, because now that credit limit will count, and then all of a sudden you may get a credit card notice in the mail, and it may start off at $500. Now you have a credit limit of 500. Use that card when you go to the gas station and pay it right off. Use that card probably when you buying food and then pay it off. You have the cash, but you use the card and then you send it right off. And over time of that practice, they're going to offer you higher credit. And then they're going to say, because of this history, we're going to give you 2,000 credit limit. You do that and keep going, then it's going to be 10,000 credit limit. Then other credit card companies will start reaching out and getting more credit.
Oh yeah, again, start small.
Yep.
Work your way up from there. Even with your credit repair, start small and work your way up.
And then I was going to add to that, because I'm not speaking from non-experience of it as well. My credit went bad in 2008 because I had two properties, lost a property, and maxed out cards, and I had to rebuild. And those are some of the things that I was able to do through rebuilding. And then I got all my cards back and some.
Oh, okay. Excellent. So I'm glad you're speaking from lived experience as well as the education.
Yep.
Yeah. Are there any books out there or any resource materials that you think people can read or look at to help them further their financial literacy?
Oh, definitely. It's numerous of books
Mhm.
out there. One I love, one that changed my outlook on things was Money, Wealth, Life Insurance. It was
Okay.
written about 5 years ago, and it talked about how banks have all this money invested in life insurance assets, and companies have all this money invested in life insurance assets because you can use this as your own banking system and be able to borrow money from your money that have grown in that account and
Mhm.
continue to keep your money in the account. So it's like using the same dollar twice. So all that wisdom is up in these books: Money, Wealth, Life Insurance, The Retirement Miracle, What Would the Rockefellers Do, The Financial Pocket Knife, The Laser Fund, Family Wealth Book, the Becoming Your Own Bank. These are all books that will give you some great knowledge and a great starting point.
As we get ready to wrap up, Dr. Joe, what would you say is your intention in this space as a financial educator?
Well, I want to make a difference in the homes, especially with everyone, but when it comes to our people, right?
Mhm.
African American blacks, we has been lacking this financial literacy for so long, and we so behind on it that it affects the net worth of a family. Like a lot of times, I have seen it on CNN, and it said that the net worth of a black family in America is $25,000. On average. That's to say that if you sold everything you own, how much is it worth? And you mean to tell me the average in America for us is for African Americans is $25,000? And to me, for me to
Wow.
get into this field, and I talk with numerous of people, I've been in this field for the last 5 years in the financial world, and I sit with some of us, right? And when I ask that question, what's your net worth? A lot of them say, what is that? What is
Mm.
the net worth? And I have to say, well, if you sold everything you own, how much will it be worth today? And they just, first thing they do is laugh. I don't own nothing.
Oh,
It's about 85% of us. I don't own nothing. And so that number matched the response that I get, right? And so what I want from it is to make sure we get that education. But a lot of times we so skeptical and think everything is scam, and then hearing it from our own person, it ain't right. It'd be like, man, I don't know, that may be a scam, or it's hard to kind of trust our own people. So
right.
it's definitely a task, but that's what I hope to do in this space, to be able to give them the education, to point them in the right direction, to start somewhere and start growing and seeing how this can work for them and their family, because it's very beneficial.
Now, I just had one question that popped in my head when you were talking about, so many people think things are scams.
Yeah.
What are some telltale signs, like one or two things, where you can tell this is a scam? What are
hmm
some things to look for?
Where you could tell that it is a scam.
Yes.
Well, for one, if somebody collecting money and there's no product, that's a
Mhm.
scam, right? Just collecting. It's kind of like they say, the pyramid scheme type thing.
Right.
Collecting money and this person come in. Though that's something that you want to look for, and then also look for licensing. What kind of license do you have to have? Is it background? Is it regulated by the state? Things like that.
Absolutely. Well, thank you so much, Dr. Joe, for being on this podcast and educating us about, like I said at the beginning of the podcast, at the beginning of this conversation, something we all need to continue to learn about: money, credit, financial literacy, wealth. It's something that once you start learning, that needs to continue. It does not ever need to stop.
Definitely.
So, my last question for you, Dr. Joe: who do you think would make a great guest on the podcast? But you have to help me get them on.
I have a good friend of mine, a guy named James Abdullah. I actually met him cutting his hair at my barbershop, and the guy is a very talented businessman, entrepreneur, real estate, a developer. So he would definitely bring some value to the listeners that will be listening in.
Excellent, excellent. We cannot wait to learn from Mr. James. And again, thank you so much, Dr. Joe, for teaching and educating us. To my community, thank you so much for tuning in and watching. You can get Dr. Joe's podcast and all of my other podcasts on YouTube Podcasts and Apple Podcasts. And always know, you always have time to listen and learn on the go.